Hello, Next Home friends. I'm Wendy Anderson, broker owner of Next Home Next Step in Ashland. Thanks for joining me today. If you're thinking about buying or selling a home and are exploring your financing options, this is the perfect video for you. I'm joined by Kristen Eck of NextMortgage, a preferred lender partner of Next Home Next Step. Hey, Kristen.
Hey, thanks for having me on, Wendy.
Yeah, thanks for coming. Welcome from Florida.
Yeah, I'm sure we are a little bit warmer than you, although today we did have some brisk weather, but yes, thank you.
Oh, well, we feel bad for you. Your brisk weather is
I know,
probably
I'm
60.
Sure you do.
So I wanted to bring Kristen on today to talk a little bit about mortgages and working with NextMortgage. She's a great lender, very responsive. So let's start with an easy question. Give us a little bit of information about yourself and what NextMortgage is.
Yes, absolutely. So NextMortgage is a direct lender. We are a great partner for Next Home. We are actually a joint venture. So we are a preferred lender for Next Home. We are half owned by Next Home and then half owned by a large mortgage company called CMG. CMG is the largest privately owned mortgage company in the country. We are in most states. And so we are, again, a direct lender, not a broker, and so we do keep all of our loans and keep them on our books and house them inside the company.
Thanks for clarifying that. You and I have spoken many times about NextMortgage, and you guys have some great products. I kind of like to go through a couple of those today. I know you have a few slides that you can pull up and show us your different programs, but let's start with the easiest one. What is a pre-approval through NextMortgage, and how's that different from anything else that we might find with other lenders?
Yes, so I actually do. I'm going to share my screen here because I have some fantastic slides that I'm going to share with you that will cover some of these programs. And so really when you're looking to start the home buying process, it's really important to start with the pre-approval. And you can really start with a pre-qualification, but the real way to start the process is with a pre-approval. And it's going to allow us to do quite a bit in the beginning of the process by looking at your income, assets, and credit to make sure that we review with you what the monthly payment's going to look like, and we review with you the qualifications that you have in comparison to what we can qualify you for versus what you're comfortable for. Now, we at NextMortgage do take it one step further, and we do what is called a next step approval. So what we do with that is we take your information along with the documentation and submit it for underwriting. And underwriting does a full review on income, assets, and credit. Of course, we wouldn't have a property picked out at that point, but it does allow us to do the approval on you as your finances and what they look like. This does a couple of things for you. It allows you to take that and make your offer stronger when you do find a property. So if you're going up against other people and other buyers, and you've been fully underwritten, your offer is going to be stronger than what they would potentially have as just a pre-approval. And it also allows us to close faster and maybe potentially waive some contingencies because we've got a shorter period of time that we have to go through because we've done a lot on the front end. So, and then again, it just gives a lot of peace of mind. You know that you've been approved, you know that everything checks out. So now all we're going to have to do is just review the property.
So before we go any further, love the name. Next step approval.
That's right.
We totally didn't have anything to do with that. That is actually the name of the program.
That is the name of the program. That's right. And it just lines right up with you.
It does. So we've been working with buyers for a few years now who say they want to wait until the rates come down. What would you say to that?
So yeah, this went around, okay, there we go. This went around for quite a bit last year, but I really wanted to, I'm so sorry here. This was supposed to be turned off. So I really wanted to kind of go over the numbers of what waiting to buy looks like. So a couple things. If you wait to buy, waiting for rates to come down, you are waiting just like another couple other million people are waiting. And so when that happens, there's going to be an influx of buyers in the market. It's going to be a little bit harder to get exactly what you're looking for. It's going to be harder to negotiate things like seller paid closing costs and things like that. So what I have here explained is what is the true cost of waiting? Because not only is it going to be harder for you to actually get a property, but it's also going to be it's also a little bit more expensive. So there's a cost of waiting, and what it looks at is the difference in the payment. So if you waited 12 months, yes, you're going to save potentially $3,000 on a monthly payment because the rates would be lower. But then you also have to look at what's the cost to refinance. So basically, you're looking at a savings of, or a cost to you of $4,000 to pay for a refinance. The good thing with NextMortgage, which we're going to talk about, is that $4,000 is non-existent. So this is just a generic example, but we don't have cost of refinancing. So that's a total of $7,000. That's the cost to you. If you look at the appreciation, if you were to buy today versus 12 months from now, in most markets, you're going to see appreciation of somewhere around 3 to 4%. So the appreciation of a property, which is the value it's going to increase over the next 12 months, could be potentially somewhere around $33,000. And then the amount that you're actually going to pay down on the loan during that period is roughly about $6,000. So you've got a total of $40,000 there. When you look at what the cost of waiting for you for a 12-month period to buy in 12 months versus buying today, and you look at the benefit of buying today, even though rates are higher, you're looking at a net benefit, a profit to yourself of $33,000, even though you've got the cost up here. So what I would say to people that are waiting to buy is, let's look at the numbers specific to your market. Let's look at the appreciation. Let's look at what the real cost to you is of waiting, because there really is a negative potentially in waiting to buy in 12 months.
There sure is. And we are still seeing a property appreciation here in Ashland. So totally agree with that. So let's say we do get a loan. Maybe talk to us a little bit about what your rate rebound program is.
Yes. So rate rebound is fantastic. And that goes back to that screen before where I talked about the no lender fee refinance. So basically, there is a cost to doing a refinance, and there's always been a cost. And so we offer a 5-year no lender fee refinance that allows you to drop your interest rates really essentially as many times as you want to within that 5-year period, with no fees from us, as well as $1,000 credit towards title company fees. So when you look at the total cost of what a refinance will be, it's dependent on the loan amount, and then also rebuilding escrow. But with us, we're able to actually charge no fees on our side. So we've got absolutely no fees to you. We actually are able to move your escrow account from one loan to the next. And so therefore, you're looking at saving potentially somewhere around $4,000 to $5,000 on refinancing compared to what you would have if you didn't have this offer.
So have you had people that when the rates have gone down 0.5%, they use this program, this rate rebound, and then
Yes.
if it goes down another 0.5%, like I bet you have people that are just sitting around waiting for the rate to fall about 0.5% and then giving you a call.
Absolutely. And we're monitoring it too. Yeah. And we're monitoring it too, because as soon as rates come down, and we believe rates will come down, and as slow, they're not going to go from like 7% to 5% overnight. No. So we're going to see a step down of rates. And so what this allows you to do is every time your rate drops at least 0.5%, we're going to allow you to take advantage of this. And so as they slowly come down over the next few years, I mean, 5 years is a long time.
It is.
So as they slowly come down, you're able to take advantage of it without that high cost of a refinance. Typically, when you're looking at refinancing without a program like this, you have to outweigh what's the cost of the refinance and what's the savings you're going to have. This really negates a lot of that concern just based on the fact that there's very little fees.
Perfect. So now what about, let's kind of go into some of the other programs, the actual programs that you have. So especially like, do you need 20% down?
Yeah, so that is a big misconception. What I have here is a document that shows basically what the minimum down payments are on specific loan programs. So it's, believe it or not, I hear from a lot of people that think they need 20% down to buy a home, and it's absolutely not the case. So let's go through what loan programs are available and what the minimum down payments are on them, so we can kind of be clear on what you need to look at. Your VA loan and your USDA loan loans allow for 0% down. So those are great programs that allow you to put 0% down, and then you really just have closing costs to worry about. And there's some programs out there that can help with that too. Conventional, if you are not a first-time home buyer, you can do as little as 5% down. But as a first-time home buyer, you can do as little as 3% down. So that's a great program. It used to be that FHA was the only option for first-time home buyers with low down payment, but now with conventional with 3% down, that opens up a lot of other opportunities. FHA does allow you to do 3.5% down. Again, used to be the main first-time home buyer program just because it was the lowest down payment option. But now there's a couple options there. And then we've got some other programs that allow for assistance and ways of raising funds for down payment we'll talk about.
So the one I would like to talk about next that I see on here is your home funded program. This one really is kind of interesting to me. And so maybe you could kind of talk about this. This seems like it says on there, like your wedding guests help with your down payment. I think this would be a fabulous program for those getting married.
Yeah, so Home Funded really could be used for a lot of different things. Home Funded is a crowdsourcing down payment program that allows you to raise funds from anybody for your cause of purchasing a home. So typically with most loan programs, you have to be a family member to gift for down payment. This program actually allows anybody to donate to the cause of you purchasing a home. There is a campaign set up and a portal where anybody can go in to donate, and they use a credit card or debit card to do so. And so for this example here, with wedding season coming up, graduation coming up, this is a great example as to how somebody could raise money. So in this example specifically, you've got a wedding, you have 100 guests coming. Say you were to, instead of doing your registry and getting china and all those things that most people don't typically want anymore, throw this out there and throw out that you're trying to purchase a home and you're looking for people to donate to your campaign to be able to raise funds. So if you were to get your wedding guests to gift $50, then you could potentially get that $5,000, and then if you're a first-time home buyer, will donate a grant of $2,000. So look at that. Before you know it, you've got $7,000 towards a home purchase that traditionally in any other loan programs out there would not be possible. So this can be used in so many different ways. Like I said, graduation's coming up. That could be a great thing. You don't have to have a pre-approval with us to do this. There's no time limit on how long your campaign can run. So you essentially could set this up for a child. You could set it up for somebody graduating from high school. So they can start raising money. So when they graduate, maybe from college or down the road, whatever the case may be, they have funds raised to be able to purchase a home.
Is there a maximum they can have in this account?
They can raise as much as they want, and there's no time limit. So again,
so like what you were mentioning, like if it's a newborn and grandma and grandpa want to deposit $100 every time there's a birthday.
Yep.
Come the time they're 21, they might have a nice amount of money there.
Yeah, if you think about it, how many milestones are throughout a child's life, and it's really no different. We start things like this for our children to go to college sometimes, and so this is a way to start, a program for people to gift along the way for them to be able to purchase a home. The biggest obstacle that we find for most people is funds needed for down payment and closing costs, and so this is really lifting that obstacle.
And I assume that you have flyers that you can provide for these programs.
Yes.
So I see the one here that says, like, your wedding guests, but would you have one for graduations or anything like that you can do?
We have just some generic ones, and then we've got graduation ones. So exactly, you can share this with your family and friends. It can be shared on social media. There's lots of different ways to get money into the account. I like this one just because it spells out, this flyer spells out like how you can really get to that large dollar figure. But yeah, we have people raise $50,000 over the course of their campaign, just because it's a really great way to get money into the account, to get money for purchasing a home.
That's awesome. I like that. I like that idea. So, our market has improved a little bit, but this year, especially, making it a little easier for our FHA, VA buyers. Maybe you could touch a little bit on the programs that you have specifically for them.
Yeah, so FHA Buyer's Choice is a program that allows for you to essentially purchase a home with funds put into the account for down payment. So there is a 3.5% and a 5% option. So depending on which option you choose, depending on if you're able to negotiate any closing costs from the seller, you could essentially maybe buy a home with very little out of pocket to nothing out of pocket. This program has no income limits. You don't actually have to be a first-time home buyer. There's no military requirements like there is on the VA loan with 0% down. The home can be absolutely anywhere. And the minimum credit score on this program is 620. So it's a great down payment assistance program that allows somebody to purchase a home when they haven't, when, you know, maybe home funded is not the right thing for them. Maybe they don't have anybody that can donate, that kind of thing. This is a program that can be used to cover the down payment and some of closing costs.
Okay. You know, we're kind of seeing houses come on the market that maybe need a little help. I know I recently had a property that the kitchen was in good shape, but there was this very large burn mark on the countertop. Do you have any kind of programs that would help with any kind of rehab property, anything like that?
Yeah, so
renovation loans?
The renovation loan is a great option for that. And renovation can be used for exactly what you're talking about. You know, inventory is a little bit lower, right? And so if you find a property that maybe is on the right lot, but doesn't have all the features you want, or it doesn't have a large enough kitchen, or you need to add a bedroom onto, or whatever the case may be. This one talks about an ugly kitchen. So a renovation loan allows somebody to purchase a home and build the renovations into the loan. So an example would be they find a home for $250,000. Say the renovation that needs to be done is $50,000. So now we've got roughly about $300,000 total amount that's needed. We're going to build that $50,000 renovation into the loan and base it off of a $300,000 purchase price. And so basically we're allowing them to build what they need to be done or what they want to be done. And it's just, we go ahead and close the loan. So we still close these in about 45 days usually. And then once the loan closes, they have a contractor and we're dispersing funds out for the work to be completed. So it's essentially getting them maybe the area they want to be in or the lot that they want, but with what they actually want the home to look like.
So I heard you say about 45 days that takes. Do they have to get 3 bids? Like how is that working?
They can choose. They don't have to get a certain number of bids, but it does have to be done by a licensed individual. Okay. So this is not a do-it-yourself program. Yep. Because we do have to have licensed trades essentially that are doing the work. But they don't have to go out and get a certain number of bids. That we need bids for the number or for the work that's going to be done. So if it's a new roof and it's a new kitchen, we're going to be looking for the bids for those things. And then we're going to just make sure that the contractors that are doing the work are licensed and insured. That's very important. And then we're going to go on our way. So that's typically the longest part to this is just getting the bids, depending on how long it takes them to get the trade out there to see exactly what needs to be done.
So kind of going along with renovation loans, we are starting to see a little bit of new construction in our area. I know when my husband and I bought our house, we used a new construction loan. So maybe you could do you have a program for new construction?
We do. So yes, we have construction financing. And basically what this allows somebody to do is purchase land and build on it with one loan. So, or somebody could actually own land and we're going to use the equity in that land towards the down payment. So for example, if somebody owned a lot for $50,000 and it was owned free and clear, we would allow them to get this loan. We would use that $50,000 towards the down payment to cover down payment. And then we would do the construction loan and allow for draws to be done for the work to be completed. So this does obviously have to be with a licensed contractor, a general contractor, but it's a great way to get exactly what you want. With a renovation loan, the home's existing and we're just doing some changes to it. This is the way for you to build exactly what you want on, a land you already own, or buy land at the same time and do this loan. During the construction phase, it is an interest-only payment that's being made, and it's done out through several draws. And then we have the final end loan that closes and allows them to start their traditional 30-year loan process.
So we touched on, conventional and FHA and VA. What about, we have some traditional, non-traditional buyers, like those of us that are 1099 employees. Do you have programs that are kind of geared towards those us folks?
Yeah, so there's definitely programs out there that are non-traditional. So you've got your traditional programs like we've covered, which would be conventional, FHA, VA, USDA. Those programs all look at traditional income, the way that we would normally calculate income. If you're W-2, we're looking for W-2s and pay stubs. If you're self-employed, we're looking for 1 to 2 years of tax returns to validate the income. The non-traditional way of calculating income is going to be through a different type of loan that allows us to look at maybe bank statements. So if you are self-employed or you're heavily commissioned or tipped and you have the ability, you're 1099, we can look at your bank statements and see how you're depositing your income there and generate an income average from those. We've also got a 1099 loan that looks at what your 1099s have been. We've got profit and loss loans. So lots of different ways of calculating income that is not your traditional way of looking at just tax returns. We know and understand that not everybody files their tax returns the same way. So therefore, sometimes generating what the income looks like from tax returns is not a true picture of what the income is.
Sure.
And those programs are great for that.
So we've touched on quite a few of the buyer programs. I know you have a couple programs for sellers, and the one that I really wanted you to touch on today is your list and lock program. That some other lenders might call it a rate buy down, but maybe you could kind of give us an idea a little bit on the list and lock.
Yes, so List and Lock is a fantastic program for sellers, and it's a way to really differentiate your property. So I'm going to talk about List and Lock, and then we've just added this List and Lock and Save, which is fantastic too. List and Lock, gives the seller the ability to market a lower interest rate than what others would see out in the area for interest rates, and actually market it compliantly. So typically, it's really hard to advertise an interest rate because there's compliance that goes along with it. We have to advertise the APR and so forth. With List and Lock, the seller is basically agreeing to pay a certain amount towards closing costs and to buy the interest rate down. So I priced one out today, and it looked like we could potentially market rates as low as 5.99. So,
wow.
What we see is that what a lot of people are waiting on is rates to come down. So if we are marketing and are able to offer a lower interest rate, that should incentivize more interest in your property. So it's very similar to like what the large builders do. They offer lower interest rates. It peaks interest. People come in, they buy, they get that interest rate. This is that same program, except for it's just for existing homes. So it gives you all the marketing materials and a sign writer and all the things that you as an agent need to market the property different than what the neighbor is or some other homes in the neighborhood might be looking at. So it's just a really cool option. And then we've added List and Lock and Save. So if a seller uses List and Lock and takes advantage of marketing that lower interest rate and they're purchasing a new home, we'll also give them $5,000 towards their closing costs for their new home purchase. So it kind of sweetens the deal a little bit.
That is a really nice program. I mean, it's really a cool thing to do for the seller than the would-be buyer.
Yep.
And they're, they have both roles. Basically, they're the seller and then they're the next buyer. So, and you cover, I don't remember if we mentioned this at the beginning, but NextMortgage is in how many states?
So we are in about 20 states right now. We are
Okay.
constantly growing. However, I do cover Florida, Georgia, Ohio, and we're adding a couple other states under me. But I have partners that are in several other states. And
Okay.
if you're looking in a state that's not one of those, we can always connect and I can find somebody that can help you with any of these
Okay.
programs.
And so when I did purchase a new home with my husband recently, we did a bridge loan, and
Yep.
you have a program called Knock Bridge Loan. It's huge right now because a lot of people, they want to upsize, downsize, right size, but they can't get into that next house because there's no inventory right now. So they need to have that bridge loan for when they find something, get their house on the market, get in contract on the new property. So maybe you can kind of, give a little information on this Knock Bridge Loan program.
Yeah, so we're doing a lot of these, coming across a lot of these right now. Again, like you said, not a lot of inventory. It's a hard thing right now to get your offer accepted with a contingency to sell your home. So what this bridge loan does is it allows you to purchase a new home and then sell your home after. So it's essentially accomplishing two things, well, actually three things. It allows you to be non-contingent, so that's really big. It allows you to tap into the equity of your home that you're going to sell before selling it. So basically, the biggest obstacles people potentially have when buying and selling is they need the money from the sale of their home to buy. So this program allows them to get access to that equity before selling. So it accomplishes that goal. And then the second thing that it does is a lot of people have a hard time qualifying with two homes. So this program allows us to not count both mortgages. So we're just going to qualify them on the new mortgage, and we don't have to count the the property they're selling in their debt to income ratio. So it accomplishes that goal as well. And so it really gives them the ability to get the house they want, get under contract, get closed, get moved, not have to strategically plan that buying and selling on the same day, and then removes the issue of the contingency, which, we are, like I said, we're seeing a lot of people needing the contingency to buy and sell. And so this way they don't have to have that, and they can still get the home they love, and then they have 6 months to sell their existing home.
Perfect. So that was a lot of information in a short amount of time. Is there anything that we didn't cover that you want to cover?
Yeah, I think we covered a lot. I think that it's good though, because it gives kind of a little bit of just a top high level information on things that are out there, covers obstacles that people might have in this market. I think the biggest thing is just really sitting down with a professional and not assuming that either now's not the right time or you can't do it. We do a lot with credit repair. So, a no today is not a no forever. We want to get people on the path to home ownership. That's our goal, whether it's, next month they're finding something or a year from now. Knowing what steps need to be taken to get people on the path to home ownership is really what our goal is. We helped 150 families last year purchase a home, and that's our passion, is finding people that we can help to get into the home of their dreams, or whether it's moving up to a new home, moving down, or just a brand new home in general. So we would love to help, and I've got my contact information here, just so anybody who needs it can reach out to us. And we appreciate you having us on.
Yeah, I appreciate you coming on with me today. I know you and I have never done anything like this before, so this is the first time for us. So
yes.
It was a very educational day. I appreciate it. And I will say again, Kristen's a great lender, very responsive, and it makes all the difference in the world when you're in a multiple offer situation to have a lender that is responsive and can get us a pre-approval quick. Now, we'd like to say, let's not do this on the weekend. Let's try and get pre-approved during the week when it's a little easier. But she is very responsive, and it does make a world of difference. So if you are looking in Ashland, Richland, Wayne, Crawford counties, reach out, give me a call. I have all of the flyers that Kristen has gone over today. If you are, want more information on any of them, feel free to reach out to Kristen. My information will be down below. But if there's anything we can do to help you out, give us a call. Thanks again for watching. Appreciate it. Have a great day.
Thank you. Thanks. Bye-bye.
Bye.